Welcome traders. So today I'm going to quickly be teaching you how to know the order block that would work. Okay, how to know a valid order block. Now most people, especially those that just newly started trading smart money, are mostly confused about this. How do I know the order block that will work? How do I know if this order block is valid? How did I know that this was the order block I should use instead of this? How? Okay, how? Okay, and if I go down to a lower time frame, I'm going to see other blocks too. How do I know the particular one that we use? Okay, and after telling you about the order block, I'm also going to teach you about the mistakes people usually make, even the so-called experts. The mistake that even the so-called experts, YouTubers with high followers usually make while teaching you order block. So stay to the end of this video, and I promise you're not going to regret it. Now, let's go into it. Okay, so when it comes to order block trading, there are three things that are majorly important. The first one is there has to be a break of structure. Okay. The second one is that there has to be an imbalance. And the third one is that there has to be a liquidity grab before the order block. Okay. These are the major things you will have to consider before trading order block. Basically. Okay, now I'm going to explain what each of these stuffs mean. Now, if you are here and you don't know how to draw order block, you don't know anything about order block, you don't know anything about smart money trading, there is a link, or there are links in the description of this video that is going to teach you that, starting from learning what order block means, what smart money trading means, then how to draw order block. Okay, and there's also a video about imbalances, how to understand imbalances. There's a video on liquidity. Each of that is going to be dropped in the description of this video. So, first of all, to draw another block, there has to be what? Which is the first thing? A break of structure. Okay? A break of structure. I'm not going to go too much in a detail about how to trade it particularly, but I'm just going to tell you how to know the one that works. Okay, so there has to be what? A break of what? A break of structure. Okay? So let's say this was what we're trading, this was the market situation we wanted to trade. The other block I'll be looking at here now, since the market have shifted from a downtrend to an uptrend, the other block I'll be looking at what is this one here. Okay, this one here, because what there was what a break of structure. There was a valid break of structure to the upside. This is the first situation. Now, on the second hand, you're also going to see something I call imbalance or fair value gap, and that's going to be noticeable within this portion. Okay, you're going to see a candlestick that shows you an imbalance. Okay, that gives you an imbalance or a fair value gap within this portion. Now we're going to go to the chart. We're going to see this for ourselves. We're going to see this for ourselves. Now, the third thing which I told you about is what? It's a grab of liquidity. Before the market moved and made this move, okay, before the market made this big move you are seeing here, you are going to see what? A liquidity grab here. Okay? You are going to see a liquidity grab here. This is what makes this order block cogent. This is what made this order block real. Are you getting me? And this liquidity grab will be probably seen even in the lower time frame, or it might be in form of a wick. I'm going to explain what that means. So that way you can look at order block as a break of structure. It's also if market is doing something like this. Look at this. The market broke structure to the downside. It broke structure to the downside. It broke structure to the downside. Meaning what? We could call this place an order block if it meets the requirement of what we're talking about. Okay, that is what? If there was a liquidity grab there, okay, liquidity grab at this portion, and also there was what? Imbalance here, which has to be what? Has to be filled. So let's go to the chart to actually, so that you actually see this for yourself. So, all right, now let's look at this order block. Okay, let's look at this order block that we see here. Okay, now let's talk about the things we listed. I'm zooming in now and look at it. First, was there a break of structure for this order block? Okay, was there a break of structure for this to be called, for us to call this portion an order block? Was there a break of structure? Look at it and you see that, okay, yes, there was a break of structure. The market broke structure to the upside. Okay, so the first one is checked. Do you get me? Now, secondly, was there a liquidity grab before this order block? Or was there a liquidity grab formed by this order block? Now, if we zoom in here, Okay, let me shift this rectangle a little. Zoom in here. What exactly do we see here? I'm going to pick up a rectangle now. So let's talk about what happened here. Okay, what happened here? And what is a liquidity gap exactly? Liquidity gap is a situation in which the market actually fakes out people that we're looking toward to probably buy or sell into this portion. For better explanation, let's just look at this. Okay, now imagine market wanted to grab liquidity here. Market could simply do that by taking out everybody that their stop loss was here. Okay, take out everybody that their stop loss was here, and also take out all those that their sell stop was here. Taking out all those that their sell stop was here also. So those that already sold and put their stop loss here, market takes them out and what push back inside. So you see that it's taking both the buyers and the sellers now in this situation. That's a liquidity graph. Another way I could explain the liquidity is where there is a region, let's say a support zone that people are looking to take their trade from. Or a support zone like this that people are looking to take their trade from. And the market comes back, okay, take off the stop loss of everybody here, okay, then push back up. So you see that he also took out both those that are stop losses here and also takes out the stop loss of those that were looking to sell here. Okay, that's another way to interpret liquidity. So this was a liquidity graph. So if we check now, let's go to a lower time frame. Let's zoom into this. If you zoom into this portion, you will notice that liquidity was actually taken, in several places here. Okay, but the most visible portion were those that were looking to buy this low. Okay, people that were looking to buy this low, they were taken out. Okay, they were taken out before the market made the move upward. Are you getting it? So liquidity was taken out in this portion, and that is what made this a valid order block. The fact that liquidity was taken out and then the market pushed up with what? With momentum. Okay, the market went upward with momentum. Can you see this candle? And this is what we know as what? As the imbalance. This is what we know as the imbalance. So let's go back to the forward time frame so that I can interpret it well. This is what we know as the imbalance. So let me push back my order block the way it was before. Okay, you can see the other block. And after that, after the market took that liquidity, like I told you, took that liquidity, it made a break of structure. Okay, made a break of structure. And what? And left behind what? An imbalance. Now, if you don't know what an imbalance is here, there's a link in video that was going to explain that for you. Well, I can't go deep into that right now because this video, I don't want this video to be too long. Okay, so it left behind an imbalance. There is this large, can this show you that the buyers, or this show you that the smart money have entered the market. Okay, and whenever a large order like this is made, the order has to come back to what? Be filled. Okay, this is something that I have explained in my previous video, talking about how the orders were placed and how the orders are going to be filled. Yeah, I will explain in my previous video. Go to the link in the description and check out for the videos and watch them for you to understand. Okay, so he has to come back what? To fill. They have to come back to fill off most of their counter orders before what? Before pushing the price upward. So this was what? The imbalance. Okay, and here we saw that there was a liquidity grab. Okay, and also we saw what? A break of structure. These are the three major things that you need to actually know a good order block. I'm also, like I promised, I'm also going to tell you the mistake that most people make while choosing order block. But before that, let's check out another example so that I can actually explain this for you better. Okay, so let's look at this example. Why did this order block here actually work? Okay, I believe you can already see that even without me saying anything. Why did this order block work? But I think this was a 2-hour order block. I drew the order block from a 2-hour time frame. So let's check out a 2-hour time frame. Why did it actually work? Okay, now let's zoom into our chart and see. Why did this order block work? So the first thing I told is that there has to be a break of structure. And if you look, this is what we see here. There was what? A break of what? Of structure. Then ask yourself, secondly, was there a liquidity grab before this order block? Was there a liquidity grab? Advanced traders, we can basically see this with the candle reactions here. But for beginners, you have to go down to a lower time frame to actually look for it. But I can easily see that there was a liquidity grab here. Okay, but let's go down to a lower time frame. Let's say a 5 minutes time frame also to actually see that liquidity grab. Most people would have been looking to trade here, or basically to sell here. Okay, because according to them, this was the highest high that this place have actually made. Okay, you can see it. You can see most people will actually draw there wherever they draw here. And what did the market do? Market came, played around it, Okay, then took them out. Okay, then he took them out and also sold. Just like what I told you, he took both the stop losses here and also the stop loss of those that were going to buy the market here. So those that bought the breakout, that put their stop loss there, he took them out. Okay, this is what I mean by the liquidity. So the liquidity must what? Be taken before an area can be called an area of what? An area of another block or an order block. Okay, so if we go back to the 2-hour time frame that we're working with, and with time, I'm going to have to learn how to read the candles without going to a lower time, because simply by looking at this, I can tell that liquidity was taken. Okay, because this portion liquidity was taken. So that's what left behind the order block. All right. So if we now check and ask, okay, was there an imbalance by this order block? Okay, was there large orders? Was there anything that tells you that okay, that the sellers have stepped into this market? Okay, that smart money was here. Is there anything that tells us that smart money was here? Yes, if you look, you see that there were series of just sell candles that are not properly mitigated. Okay, they were not properly mitigated. So we look from this portion, okay, this portion to this portion. Okay, there was no proper mitigation between this portion to this portion. Okay, you notice that the markets came back to mitigate it. Okay, the market has to come back to mitigate it before going down. Okay, now another rule I should add to is that you have to make sure that the order block have not been mitigated. So if this order block have been mitigated like this, we can't call it an order block again. Okay, if the market come back to it become an area of an area of resistance. Okay, which the market could also decide to take liquidity before going down, because that's what happens usually at areas of support and resistance. So one is that the order block has to be mitigated only once. If the order block is mitigated only once, then the market continue. If the market come back to it, then the market is either coming back to it to break it, or it's coming back to it to use it as a resistance zone, which might eventually still break or be used as an area of liquidity. All right. So these are the major things you have to look out for if you can call an area of order block. You can continue checking and looking. I'm going to see this for yourself before an area can actually work out well for you. Okay, you have to ensure that all these three things are in check. Okay, so that is what. Now let's go to the mistake that people make, and I'm going to go back to that USD CHF for it. Okay, so USD CHF, I think that was the market we first looked at, and we're going to look at it. So what are the mistakes that people mostly make when trading order blocks? Okay, now if you look here, okay, without proper investigation, you're going to see that there were order blocks in a lot of places here. So let's say somebody called this an order block. Let's just imagine somebody calls an order block. Somebody called this. So what happens when you have multiple order block like this? One, okay, and two. This is the mistake that I see even the experts, the so-called experts, making. Now, before I proceed to this, I should inform you, in case you are a beginner here, okay, or you are still struggling with the market, understanding the market or how to read the market here, okay, I have a solution. I have something that could actually help you, okay, and this is the FSB Trading Triology. This is where everything I know regarding trading, everything I teach, both in my YouTube channel, my private mentorship channel, everywhere have all been distilled. Everything you see me teaching, everything I know have already been distilled into this 3-in-1 masterpiece. The beginner trader, the intermediate trader, and the expert trader. So if you're a struggling trader here and you're struggling with understanding both the basic concepts in trading, support and resistance, trend line, order block, whatever it is, all of them have been successfully distilled. And the specific trading strategies I use have already been distilled within the pages of this book. How I take my trades personally, the 3 trading strategies that I use have been explained explicitly within the page of this book. So if you're a struggling trader or you're a trader that is struggling with strategy, you don't know what to do, you don't know, you bought coins, this is your answer. This is your solution. Okay, so there's a link in the description to get a copy. So let's proceed. So like I was saying, this is something that I see most people do. Okay, most people, a lot of traders do this. Okay, and most times they're not confused. Which order block should I choose here? Which order block exactly should I choose here? Okay, now when the market does something like this, you should understand that these order blocks here are what? Are already gone. The order block we are looking for now is the one that made the immediate break of structure. Okay? Immediate break of structure. If you look here, this was the one that broke the immediate structure. So this is the only order block that we should be looking at right now. Okay, this is the order block that we should be looking at right now. This one is no longer valid, except this order block was from what? A higher time frame. Are you getting me? So note this. This is very important. If you're not learning anything to this video, this is one thing I need you to learn. Okay, so all these order block that you see here is already invalid, except they were from what? A higher time frame, because the market is fractal. Okay, this is the one that we should be using, because the market is fractal. Are you getting me? So in the 4-hour time frame, this is the order block that we should be using in this time frame. The only reason we can decide to use any of this order block here is if these order blocks were from a higher time frame. Okay, so if I went to a daily time frame now, daily time frame, what is the order block that you can actually call from this daily time frame that is valid for us to use? Which order block is actually valid for us to use in this daily time frame? Let's zoom out. Let's zoom out to it. Which other block can we actually say we can use in the daily time frame here? And ask yourself, what is the major break of structure here? Which major break of structure have we seen in this daily time frame? This was the major break of structure that fed into the criteria that we spoke about. Okay, and if you go deeper, you're going to see also that the liquidity graphs. Okay, here. Are you getting me? So this is the only order block that would have been looking for if the market decided to break our 4-hour order block. So this was it. This would have been our order block. So if the market, let me draw it out. If the market was to return, it was going to return down to this daily time frame order block. And if you notice that this daily time frame order block coincided with the 4-hour time frame order block that we drew. Are you getting me? So what you will see most people do is that they will not be trying to guess which of the order block is going to hold. Okay, starting from this one. Okay, this is the valid one, good, in the 4-hour time frame. Okay, starting from this one and this one. Now, if the market come back to this position to do something like this and break it, okay, and do something like this and break it, this was going to happen because these ones are what areas of liquidity now. The only reason why the market is going to respect this order block here or this one here is because this order block was part of a higher time frame order block, or was also drawn from a higher time frame order block. This was the higher time frame order block, the bigger time frame, the daily time frame. Okay, and within it were also what? The 4-hour time frame order block. Now, the market is very likely to respect this one and go up instead of what? These ones in between. So this is the mistake that most people, even your gurus, make because they don't understand it. Okay, so if you have a situation like this where there are multiple order blocks, you have to ask yourself, especially if the market decides to break this one here, you have to now ask yourself, okay, where is the major best zone that I'm looking at where I can buy this market from? Okay, these order blocks are already invalid. So you go to a higher time frame to go and look at it and see where is the major order block or where is the higher time order block that I can be looking to take this trade from. Okay, so because if the market come back to this position, it's going to break it. It's going to break it. It's going to. Now let me show you an example. Let's just check the chart quickly. If we look at this, so if we look at USD/JPY, okay, look at this USD/JPY, okay, in this time frame that we're looking at, you are going to notice that okay, a lot of people would have been drawing their order block. Let's see. Okay, draw and drawing. And because if you look at each of these places I'm drawing, there was a break of structure, okay, for them. So that is if you are following up break of, there was a break of structure, okay. So I might even put here also because a break of structure here, there was a break of structure here, there was a break of, okay, this place there was a break of structure which should have made people draw here, and also this one broke a structure that would have made people draw. So you see that we already have a lot of other blocks here to be looking at, okay. What people are going to now start doing is trying to guess which of the other blocks is going to hold. Okay, and you see, at the end of what the market do, it broke through each of them. Now, why do you think this one actually, why is it that it was this one that held? Why? Now, let me show you. Remember, I told you go to a higher time frame. We're in the daily time frame now. Go to the next time frame, the 1 week time frame. And you see, what actually, okay, why did that hold? Because this was what? The structure. The major what? Major structure. Look at this. Okay, look at this. This was what the market did. And where was the major break of structure? Look at it here. And where was the market? What would not expect the market to come back to? Towards this order block here. According to what? The weekly time frame. Okay, so that's why it will not look like that person guessed it right. Then they will not post a screenshot of whatever they did, post a screenshot of it for you on their WhatsApp page or their Telegram or their YouTube, wherever it is. They tell you that they cut the move here, but they not tell you all the ones they missed here. They not tell you all the losses they got here. They're just going to pick up their what do you call it? Pick up their tool and do something like this for you. Okay, they tell you that what they are the king of the market. They know what the market is going to do. They know this, they know that. But they're not going to tell you all the losses that they got here. They're not going to tell you. Okay, so I'm telling you now the reason why this worked. Okay, and the reason why you expect to work is because it was from what? A higher time frame. That is majorly it. All right, so this is it, guys. This video is getting so long, so I should end it now. This is it, guys. This is for today's video. And don't forget to like and subscribe so you stay updated when I drop a new video or when I give updates, important updates like this. Don't forget to subscribe. Subscribe now before you leave this video. All right, so this is it. See you in the next class. See you in the next video. And I wish you the best. I'm rooting for you. All right, peace.